You're listening to Money Talks. Coming up, I'm going to share with you my favorite story, and I am looking forward to this. I've got Dr. Michael Berry on deck talking about Federal Reserve in just a moment. But first, my quote of the week. This comes from Carl Sagan, the famous, he's known him from TV, from books, everything. He wrote the book, The Demon-Haunted World, Science as a Candle in the Dark. But here we go. Quote of the week. One of the saddest lessons of history is this. If we've been bamboozled long enough, we tend to reject any evidence of the bamboozle. We're no longer interested in finding out the truth. The bamboozle has captured us. It's simply too painful to acknowledge, even to ourselves, that we've been taken. Once you give a charlatan power over you, you almost never get it back. My goodness, I can think of a lot of situations where that thing's applicable. Very pleased to welcome back to the show right now, though, Dr. Michael Berry. He is a co-editor of the Disruptive Discoveries Journal. Dr. Berry, thank you so much for taking the time.
It's great to be back and speak with you, Michael.
I feel like I've got fantastic timing with you and just a little bit of your background, besides, of course, writing the successful Disruptive Discovery Journal. But also, you've made numerous presentations to the Federal Reserve, presentations to financial analysts, etc. And what a perfect week to get you here when Janet Yellen again caused a stir, midweek when she says again that rate increase is still on the agenda, on the docket, and probably within the next couple of months. First of all, what did you make of that, and what are investors supposed to make of that? Because that seems like Groundhog Day.
Well, I think you're right. It is like Groundhog Day. You wake up and you hear the Fed talking about raising rates, and then they postpone it. I think what she said was, if things keep improving, then probably Fed funds rate is on tap. So my guess would be maybe July. I don't know, maybe June, but probably July. But it's such a minimal rate increase that it'll take at least till the end of 2018 for investors to actually get a return on their money. That's how far away we are from actual providing interest rates that make sense to bondholders. And the Fed funds rate itself has become fairly useless because now we're in a global world and we really need overnight rates that make sense to everyone. So from the viewpoint of the Fed, they need to get off zero interest rate. They must, so that they can reduce interest rates when they have to ease again. They don't have a way to ease anymore. From the viewpoint of the IMF and the rest of the world, they do not want to see the Fed raise rates.
Yeah, that's what I was going to come back to. Like, to what extent is the Federal Reserve sitting there going, if we raise rates, for example, as a Canadian, if they raise rates, I think it's a pretty good bet that you'll see the Canadian dollar go down, as an example. If you raise rates, that attracts capital from all over the world. It's like one bank having better rates than another. You sort of suck capital out of other parts of the world, which, of course, really limits their economic recovery. And so I can see why there's concern internationally about the Fed's potential there. How significant is it? How much does that factor into the Federal Reserve's decision whether to raise rates or not?
Well, that's a great question. It used to be that they worried about the U.S. economy only. And in essence, that's what Janet Yellen is saying now. Well, we're growing here. We're not really growing in the States all that much, 2.5%. Maybe we grow at 3%. But maybe it's enough to get them off zero. But having said that, it's interesting to note that they're all headed over to China on June the 7th, if I remember correctly, because the Chinese really want to know if there is going to be a rate increase, what do they have to do with their economy? In other words, will they see a capital outflow with increased rates in the U.S.? And so, it does impact the rest of the world very directly now. So it's not just a U.S. economic decision anymore as far as the Fed is concerned.
Well, we'd have a great example. This unprecedented sort of implementation of negative interest rates. It's not, you don't need a PhD in finance to understand that, hey, if I keep my money in this country, I actually it's a negative interest rate scenario. I actually have to pay them to hold it at the bank or a government bond. And here's the U.S., which is probably a safer currency, or at least equal to it, and they'll pay me. It's, as I say, it doesn't take a genius to figure out money's going to flow into the States.
Correct. And again, we have actually in the U.S. have been on zero longer than anybody. They went to 0%, essentially to 0% interest rates in 2009. So the Fed doesn't have any tools left, and if we have, and we will have another recession at some point in time, they don't have a way to ease any further. My view is that there will be a helicopter drop at some point here. The rest of the world is trying to choke consumers into consuming. And so that's what negative rates are all about. And I don't know that we'll see that because they worked in Sweden, they probably work in Switzerland, but I don't think in general negative rates really work very well, especially when one country that has the reserve currency status, like the U.S., has essentially decided they will increase rates no matter what. So it's an interesting situation. I think you'll see a helicopter drop. I think you'll see forced inflation in the U.S., and that's why I think gold and silver are going to be interesting over the next couple of years.
I talked earlier in the show that my observation is for two reasons. One is that, like, there's a G7 meeting right now in Japan. They don't have a clue what to do. They've been doing this for 7-8 years, whether it's $7 trillion, in new money, or it's the zero interest rates, it's the quantitative easing, and none of it's worked. They don't know what to do. I also made the point that one of the problems is their starting point is, I don't know what to do given my priority is to protect the status quo. I mean, they're not prepared in Europe, for example, to do a radical reexamination of their labor laws, which are so, provide such a huge disincentive for hiring, as just one example. So the central bank stepped in. They're filling that void. But I don't know, but I don't get the impression they have any idea how they're going to get out of this unprecedented policy action.
Well, I think the real issue is that they're not. Central bankers really don't have the tools left to make growth happen, and so it's gonna have to take a fiscal kind of policy. It's gonna have to take, in the U.S., the Congress. It's gonna have to be something where it's coordinated action. And one of the interesting things that did come out of the G7 meeting was a lot of talk, but the talk was, hey guys, we got to work together. But then when you see the U.S. raising rates and everybody else the negative rates, well, that's not working together. That's working. So everybody's concerned about capital outflows. I mean, that's a big concern that Chinese especially have, and I'm sure that could be in the Canadian sense. The Canadian dollar will fall relative when this does happen. Having said that, again, they're going to have to do something. I'm so disappointed in listening to both the Democrats and the Republicans in the current debating that's going on, for the presidential. Nobody's talking about this issue. They're talking about all kinds of other things, but they're not talking about how do we get growth going and how do we work with the emerging world and with the Chinese and how do we work with Europe to make sure that we are all on the same boat and we're all headed in the right direction. That's not happening.
No, I was just going to say, and I don't see it. I was looking at some data by a professor at Columbia University. I think it's James Henry it was. He looked at the last 18 months, and just to give people an idea, in the last 18 months, he estimated that $1.3 trillion in Russian assets were moved abroad. In China, it was $1.2 trillion. In Vancouver, for example, there's a ton of debate about upper-end real estate exploding, and some of it is at least due to Chinese money coming in here. It's happening all over the world, and that's why I'm trying to impress upon people. This is the key component. It's how money moves. I mean, you got a store, and all of a sudden a lot of people and a lot of money come in, you're going to do pretty well. You're trying to keep your store afloat, and all the money's leaving. You're not doing very well. Well, this is what's happening globally, and the numbers are staggering, though.
The numbers are staggering. And what is really interesting is we've seen several very prominent hedge fund managers and money managers, a.k.a. George Soros, putting several $100 million into the gold market. So, some of the smart investment money now is moving to gold and silver. And to me, that's new and it's different, and it sends a signal that I think we can expect much higher gold and silver prices, even when they raise rates and the dollar strengthens. We're seeing gold back down now to $1,220 or wherever it is, from almost $1,300. But it's going to be much, much higher as we go forward. And you're seeing the smart money moving into. I think Soros bought $200 million worth of Barrick, for example, and there have been others that have followed suit on this. So it's quite interesting.
Well, one of the things that, of course, I think that gold has not performed, that a lot of people who are keen on gold just failed to understand, was that the U.S. dollar was more popular than gold. As you know, when they recognized geopolitical uncertainty or financial uncertainty, well, the money was moving to the U.S. dollar clearly, and not moving to as much to other assets, and gold was one of them. But I think you're absolutely right, Mike. What's interesting is when you start seeing gold and the U.S. dollar rise in tandem, rise against virtually every currency, then that's a bull market.
Yeah, that really is a different thing, and we've seen that this year. Gold has come off a little bit in the last few weeks, but it's still significantly higher than it was. And we just saw some of the Japanese manufacturers start to move into silver, start to tie down Canadian silver companies. So it's interesting to see how silver will react and how gold will react here. And I think that we're gonna see some really interesting times in those two markets in the next 12 to 18 months. It's going to happen.
Yeah, it's going to be fascinating. I got to take a break. I'm talking to Dr. Michael Berry. It's always so fascinating because he gets, the opportunity and to talk to members of the Federal Reserve. I'll talk more about that because, of course, that's sort of the center of the universe right now. Everybody watch what central banks does, starting with the Federal Reserve. What's going to happen to interest rates, impacts currencies, impacts stocks, impacts your life right across the board. Dr. Michael Berry is co-editor of Disruptive Discoveries Journal. More with him in just a couple of minutes. Plus, I've got my favorite story of the week coming up and a shocking stat, the most amazing trading stat you're going to hear. I promise you, all of that coming your way on the Money Talks Network. One of the themes on Money Talks that we've been talking about for several years is the debt crisis. And it's not just at the sovereign level, which we saw manifest in 2010 starting in Greece. That was pretty obvious. Seeing it right now in places like Venezuela. You can see it in Brazil, China. The list is really a big one on that. But, of course, the decline in oil prices has changed the world, not just in Canada, but it's put a real strain on the banking system. Dr. Michael Berry is with me, Disruptive Discovery Journal. Dr. Berry, I wanted to come and talk a little bit about the uncertainty, at least I feel, about the banking system when it's got this exposure to oil and oil loans and the problems I've seen in the European banking system, for example. Maybe you could put a perspective on that for me, because that's the kind of thing that keeps me up at night.
Yeah, I think that the Saudis, as we all know, in November of 2014, actually American Thanksgiving, I believe it was, weekend, decided to pump oil, and so the price fell dramatically, and this caused ripples across the entire world. What we really worried about at the time and have worried about since is the whole issue of deflation, and deflation hits banks with a tremendous wallop. So, I think oil maybe bottomed at $26 US, if I remember correctly. It was around that area. Fortunately, it's gone back up to about $50, but we are seeing all kinds. I'm going to talk first about the U.S. banking system. We're seeing in the oil sector, we're seeing huge exposures, huge drawdowns. Wells Fargo's got a huge oil portfolio that's underwater now. Do I think that they're going to go under? No, I don't think so, but I think it's going to dramatically impact how they are able to, continue to be a commercial and an investment banking entity in the U.S. And there are a number of other banks like that. They have virtually no reserves to handle the oil exposure that they have. So in the Eagle Ford Shale in Texas, for example, in North Dakota, no matter what Donald Trump says or said this week in North Dakota, there's a lot of bankruptcies occurring, and so this is curtailing production. It's putting people out of jobs. And it's putting certainly the smaller bank system at risk. In Europe, it's similar. There's the same type of exposure, but there are other things going on. Deutsche Bank, for example, has huge derivative exposure, and nobody really knows exactly how much exposure they have or how they're going to unwind some of their derivative contracts. And there's just a number of other issues that are happening there as well in Europe that I think have put some serious risk in the banking system.
We've only got a couple minutes left. What does an individual investor do? I still think that protection is at top of the list. Yeah, because of the risk you're just alluding to. Yeah.
Yeah, I think, look, you diversify. we've had this tremendous run in the Dow Jones, for example, to 18,000, now it's 17,600. This market is, I don't care what anybody says, it's a bubble. So I think you diversify. I think that's what we're seeing some of the hedge fund managers do. We've had 5 years of a down market in the commodity sector. It's been due to deflation. I think we're at the bottom in that sector now. So I think a prudent thing to do is to diversify. And some of the Canadian silver companies now are really interesting. So and some of the gold companies, as Mr. Soros has indicated, are interesting also. So I think you diversify, and I think you want to have some exposure to this sector, this natural resource sector at this point in time.
Last question. Do you still think the U.S. dollar will act as a magnet, gold notwithstanding, too, attracting capital, as you've just alluded to? Will the U.S. dollar still sort of be king of the currencies?
Well, it certainly will, if and when they, bump rates, yes, it will. I do think longer term that there's going to be a replacement for the U.S. dollar, but I think that's down the road 3 or 4 years, 5 years from now.
I hope we get a chance to talk about. Sorry, go ahead.
Yeah. Well, when we have an IMF banking system that actually will replace the dollar, the U.S. dollar as the reserve currency of the world. Yes.
Well, I was going to say, I hope we have a chance to talk many more times. Dr. Michael Berry is with Disruptive Discoveries Journal, but where you find it is www.discoveryinvesting.com, discoveryinvesting.com. Dr. Berry, thank you so much for taking the time. I love it every time.
Well, my pleasure, Mike. We'll talk to you again.
We sure hope so.
Look forward to it. Okay.
I got lots coming your way today, especially, wait till you hear we were talking about trading a moment ago, but I'll give you a stat on this world-famous trader. You'll know her name, and we'll give that story in just a couple of minutes. Plus, what I got the most hate mail for this week, I'll play that. John Oliver weighed in on Elbowgate. I'll talk about that. But now, my favorite story of the week. I mean, this is just so great. There's one country whose citizens have said no more to corruption, no more to incompetent government. I'm talking about Iceland. Of course, they were near bankrupt coming out of the credit crunch. They sent senior bankers to jail. I can't think of any other country that did that. They got rid of their prime minister. You saw this just a month or two ago when they released the Panama Papers. There was massive protests, and the prime minister was forced to resign. But here's my favorite part. People talk about Donald Trump or Bernie Sanders. You got to get it's happening all over the world. The most popular party in Iceland has no leader. It is funded by raising money in flea markets, and I'm being serious here. Over half the population supports them. It's Iceland's anti-establishment pirate party. That's right. The party has policies like internet freedom, drug decriminalization, open democracy, that kind of stuff. In Iceland, financial support for political parties is allocated on how well they've done in the polls. Well, the pirate party receives the most money now, but their spokesperson says they couldn't care less. They're doing it another way. But it is fascinating to see. Here's another example of an anti-establishment party rising to the top. The Pirate Party, love it, in Iceland. I'll take a break. I'll come back. I've really got a shocking stat this week. I hope you're taking advantage of the podcast for Money Talks. You may be listening that way right now, but if you're not, and you want to get your younger people involved, which I really do, all you have to do is join us on Facebook, Michael Campbell's Money Talks. Or one of the things I'm spending more time now is tweeting different pieces of information that I think are important. And I read a ton of stuff, and I pick out 1 or 2, maybe 3 a day, and it's on Money Talks tweets. So join us on Twitter for that one. Okay, let's get to the hate mail. This week's lightning rod for hate mail is a beauty. I was critical of the Prime Minister for saying there's going to be no vote on changing the electoral system because the public isn't smart enough. It's better left to the elites. My goodness, I got an earful for that. I'm still laughing about it. Let me play you the comment.
You may not be smart enough to understand the debate on changing the electoral system. I mean, it's not me who's saying that, you're stupid. No, it's Prime Minister Trudeau. It's Miriam Monsef, the head of the Ministry of Democratic Institutions. Who do you think thought that title up, George Orwell or J.K. Rawlings? Anyways, and a ton of other self-described progressives, including in the media. They're all against letting the public vote in a referendum on changing the electoral system because they say it's too complex for most people to understand. Of course, they're never referring to themselves. That kind of arrogance and condescension toward everyone else is the defining characteristic of self-described progressives. I mean, democracy in voting is messy. And as Mr. Trudeau said, the public prefers the status quo, and that's not his choice. Well, I recommend he refer back to Winston Churchill's famous remark, democracy is the worst form of government, except all the others that's been tried. But if an ill-informed public is a concern, why aren't we teaching the basics of economics and finance in school, given they're key components of the majority of issues facing Canada, from sustainable health care to unfunded pension liabilities to job creation to free trade to the economic impact of different types of taxation? I mean, where are we supposed to learn about these issues? And please don't say the media. The media has allowed virtually every issue to be hijacked by politics. Now, personally, I think it's an individual's responsibility to be informed. But what are we doing to facilitate it? Well, instead of meeting that challenge, Mr. Trudeau says no to voting on this fundamental issue of changing the electoral system. Talk about running from a challenge. My name is Mike Campbell. Join me Saturday.
There you go. I say, one of the things I've learned here in the last few months, if you even get near Justin Trudeau, you're going to get hate mail. I mean, it's incredible. Some people must be sleeping with a 3D blow-up of him at night. Anyways, get over yourself. Everything's not so serious. Hey, speaking of fun, let me give you this week's shocking stat. Now, you know, Hillary Clinton's cattle trading is legendary. She started with $1,000, turned that into literally $6,300 overnight. 10 months later, she had $100,000. And then despite one of the greatest trading records in history, she never traded again. That's not my shocking stat, by the way. And there's also no one, by the way, she didn't even put up the minimum amount insisted by law in order to make that trade. No one explains that. But she started with $1,000. 10 months later, she's got $100,000. I mean, come on. Maybe she was the luckiest trader in the world. Maybe her broker was the most skilled. Maybe they skirted security laws, and Hillary was assigned illegally assigned winning trades after they happened, or maybe the orders were arranged in such a way that she always benefited. I don't know. But here's my shocking stat. In a research piece for the Journal of Economics and Finance, economists from the University of Northern Florida and Auburn investigated the odds of gaining a 100-fold return in the cattle's future market during the period that she did it. Okay, so they used a model that was stated up front to give the hypothetical investor the benefit of the doubt. And here's what they concluded. What were the odds of starting with that $1,000, turning it into $100,000 in 10 months in the cattle trading market? Are you ready? They concluded that the odds of such a return happening were at best 1 in 31 trillion. Yeah, sure, that's what happened. Legal trading all the way. 1 in 31 trillion. I read that report and I just was blown away by it. In other words, it was impossible, just in case you don't get the significance of 1 in 31 trillion. I'm going to take a break. I'm going to come back. Hey, Aussie Jurek's away this week, but I've got John Oliver weighing in on Elbowgate. Plus, I've got going live to the trading desk, and I've got a good Goofy Award. All of that coming your way. Stay with us. Well, of course, we heard nothing but Elbowgate going back over the last week. I mean, it was really over the top, too much, everything about it. But, of course, it was also noticed internationally, and that's why today I'm going to play a little piece that John Oliver did. If you don't know John Oliver, he started, at least in North America, he started with Jon Stewart, has now got his own HBO show. And I got to tell you, I had to be careful with the editing on this one because he uses some naughty words, but we got rid of them, so it's okay. So let's play John Oliver's take on Elbowgate.
Canada, what you get if America and Britain had a baby they abandoned in the snow. Canada's Prime Minister, Justin Trudeau, has been enjoying a bit of a honeymoon since assuming office 6 months ago, with most news coverage focusing on events like that time he held 2 baby pandas, which is, yes, pretty cute. I mean, it's no The Rock holding 2 French bulldogs in a swimming pool, but it's close. It's close. But this week, Trudeau's grace period came to a screeching halt as Canada was consumed by Elbowgate, a scandal concerning Trudeau apparently manhandling a Canadian MP and elbowing another during an altercation in Canada's House of Commons. So what happened exactly?
Now watch this. The man in the front is the Conservative whip. He can't get by a group of NDP MPs, including leader Tom Mulcair. On the left, the Prime Minister comes striding over to intervene. He has words with Mulcair. At the same time, he clearly also makes contact with MP Ruth Ellen Brosseau.
Okay, I mean, I guess that's a brawl by Canadian standards. Although, to be honest, in New York, we just call that shopping at Trader Joe's. But still, Trudeau absolutely should not have done that, and he clearly knew it, given how quickly he took to the floor to apologise.
I admit I came in physical contact with a number of members as I extended my arm in, including someone behind me who I did not see. If anyone feels that they were impacted by my actions, I completely apologize. It's not my intention to hurt anyone. It certainly wasn't. It is my intention to get this vote done.
Wow. Stammering out an apology that goes on to receive a standing ovation. That clip may as well just be the new Canadian national anthem. But the members of the opposition were not ready to accept Trudeau's apology.
I will move that the matter of the physical molestation of the member for Berthier-Masquinage be referred to the Standing Committee on Procedure and House Affairs.
Oh, come on, don't use that word. Yes, technically there is a definition of molest that means to bother, interfere with or annoy, but it's still the second most unpleasant M word in the English language after moist. I just said it. I'd wash my mouth out with soap, but that would make it all moist. Oh, no. I said it again. And that sort of outrage led Trudeau to issue a second apology on the House floor, followed by a third apology at an event celebrating the official apology he'd made for the 1914 Komagata Maru incident, at which he, and this is true, apologised because his elbowing might take away a little bit in the news tomorrow from the apology that he was supposed to be celebrating. And when he returned to the House of Commons the next morning, you'll never guess what he did.
I am apologizing and asking for members to understand how contrite and how regretful I am with my behavior.
Enough! There may be no clearer difference between the United States and Canada than the fact that in the US, presidential candidates write books called No Apology, while in Canada, Trudeau may be expected to spend the remainder of his term in office apologising for the existence of his arm wherever he goes.
Okay, that's your Canadian Parliament at work. They're the ones who take over half my paycheck. Boy, I feel comfortable about that one. Hey, look, I'm going to take a break. I'm going to go live to the trading desk. So much to talk to Victor Adair about. Plus, I've got a Goofy Award that I'm sure for all you politicos out there, you won't be happy with. But in the meantime, I want to encourage you to join us on Michael Campbell's Facebook and join us on Twitter. Follow us on Twitter. And there's so much coming down. And, of course, you can go to our website, moneytalks.net. And you can pick up those daily business comments every day of the week. You can pick up anything you want to re-listen to or hear again on the Money Talks show. So all of that's at moneytalks.net. Take a break. I'll come back live from the trading desk with Victor Adair. Man, there was a lot happening this week, and I'll share a Goofy Award with you in a couple of minutes. But right now, we got to go live to the trading desk. Victor Adair joins me this week. Vic, I mean, I know it's a cliche almost now, but you see the volatility, you see the action out there. And let me I want to get to the major market that had the highest trading volume ever this week. And I'll get to that in one moment, but I needed a quick take on you, Dr. Michael Berry, on earlier talking about the Federal Reserve, because that also was a big story in the markets this week when Janet Yellen comes out and says, hey, don't take that rate cut off. We think we're going to do it soon.
Yes, I think the Federal Reserve will raise interest rates. I'm
okay,
not sure
when. Okay. Well, that's still not that easy a bet, by the way. Hey, let's come to what market had the biggest trading volume ever?
Well, it was the New York COMEX gold futures market that had an all-time record high volume this week. Now, I'm exaggerating just a hair, okay, because you can do that on radio, right? There was a week in 2013 where the bottom fell out of the gold market and the weekly volume was a shade higher than it was this week. But it kind of, and by the way, volume, we traded 1.8 million contracts. That's roughly, and I'm rounding it, $200 billion worth of gold this week on the futures market, and the prices were down about $40 on the week. I think the key question is, so why is gold falling on this big volume? And
just wait for a sec, Vic.
Okay.
Let me ask you a question. Why is gold falling on big volume?
Well, I thought I'd save you the trouble, Mike.
Okay.
Here's falling. Okay, gold has been down for 4 weeks in a row. It's been down for the last 8 consecutive days. It's falling this past week on big volume, and it's a two-part answer. One is it's all about the U.S. dollar. Gold hit a 17-month high beginning of May. The U.S. dollar hit a 17-month low. They are very much the opposite sides of the coin. A strong U.S. dollar is just not good news for gold. A weak U.S. dollar is good news for gold. That's part one. And the second part is what we've been talking about on the show here for a few months now is what I call positioning risk. I remember 3 weeks or so ago, I quoted Bob Farrell, who used to be the famous analyst for Merrill Lynch, and one of his sayings was, the public always buys the most at the top and sells the most at the bottom. And, we just had, the market was, speculators had piled into this market in the first 4 months or so of this year. I mean, we'd had a 4 or 5 year bear market in gold. Of course, everybody wants to pick the bottom. And we got, and who sold them the gold? It was the commercial accounts, the people who are actually in the gold business said, here you go. And now that the price is falling, I think we're at risk of more of those speculators having to throw in the towel.
Yeah, it's interesting. Dr. Michael Berry was talking about some of the big-name investors like Soros, Druckenmiller, those kind of people have been buying positions. And I always warn people, and I learned this the hard way years and years ago, that they don't have the same kind of investment approach as we do. If I have $5 billion at my disposal, I don't mind moving a quarter or $250 million into any market and saying, I don't need that to perform right now. That's a position that is for safety. I think that's what's happening in the gold. You're starting to see some major investors position themselves, but their time frame can be completely different. Their portfolio makeup is also completely different. It's a hedge for them. So I wanted to say that's that side. But I want to talk a little bit more short term here, Vic, and that is, I mean, I know we don't have a crystal ball, but when you look at the trading action this week, I mean, the question's going to be is the fall over? No,
I really don't think so. I think that what we've seen here in the last 4 weeks. And by the way, here's another one. I mean, if the month had ended, I know we got 2 more days to go in the month, but if the month had ended, we would have the first monthly key market reversal down in gold that we've seen in 12 years. And, I've talked on the show over the years about, key reversals, whether it's a daily, a weekly, but a monthly is that's unbelievably rare, where the market trades above the previous month's high, below the previous month's low, and closes below the previous month's low. So if gold's a little weak here the next couple of days, and by the way, one of our good friends, Martin Armstrong, talking about the 1206 level is very, very key to the way he looks at the market. I think the market is at risk. And this is how you deal with probabilities as a trader. Sure, we could turn around. I mean, there could be something blow up this weekend and gold will be $100 higher on Monday. I don't know. But I'm saying the way to bet, the probability is market goes lower in the short term. Mike's talking, when you were talking to him earlier, about gold will be higher in 18 months from now. Well, I don't know. Could well be. I could make a case for that. But as a trader, I kind of want to know where it's going to be in the next few days, next week, that sort of thing.
Yeah, well, I'm seeing these major trends. I've certainly written in our blog on moneytalks.net, and I hope people sign up for the blog because, I think it's doing pretty much what we anticipated, a move toward 1,300. Then it's going to back off. We'll have to have a very close look, as you say, various numbers out there. But, if it breaks below, as you say, I was talking to Marty, he says, breaks below 1206, then we're going lower on that one. Vic, we got about 30 seconds. Tell me what your short-term trading account looks like.
My theme really is the U.S. dollar goes higher, okay? So I am short of Canadian dollars, I'm short of yen, I'm short of euro, I'm short of gold, and, the daredevil that I am, I'm short of crude oil.
Well, we'll keep an eye on all of that. Vic, thanks for taking the time.
You bet, Mike. Have a great weekend.
Thanks to all of my guests here. And, of course, Money Talks is brought to you by Solera Club. Solera Club is a royalty-based investment, meaning you as an investor get paid first. You're first in line. There's no fees with it. It's in the tech sector. For more information, go to soleraclub.com. Time now for this week's Goofy Award. Ah, yes, U.S. politics, the never-ending fountain of Goofy Awards. Today, once again, I'm going to feature Hall of Fame member Hillary Clinton and nominee the Donald. Let's start with the Trumpster, who the New York Attorney General said is the kind of man who goes to the Super Bowl and thinks everyone in the huddle is talking about him. Donald has a good chance to be president if he could just stop alienating people, but he doesn't seem able to do it. This week, he went after the Republican governor in New Mexico, Susana Martinez, the first and only Latino governor in the U.S. Mr. Trump said she had done such a poor job that he should run for governor of New Mexico. That's the trifecta in less than a minute. He alienated someone of Latino origin, a woman, and a Republican. Man, that is talent. He's got a gift. Politically unbelievable, but not surprising. Mr. Trump has proven to be an equal opportunity insulter. Republican, Democrat, man, woman, but Donald can insult them all. Equally unbelievable, but not surprising, was the response from Hillary Clinton and her ardent supporters to the State Department's Office of the Inspector General's report, by the way, appointed by Obama, on her use of private email, complete with the server at home. In a nutshell, the report shows conclusively that from the opening bell, Ms. Clinton lied and continued to lie. She claimed that she had legal approval for the server. Absolutely not. Emails she wrote clearly demonstrated she was totally aware of the security risk. As the report outlines, professionals in the State Department who raised concerns were told never to speak of it again. The litany of deceit is far longer, but the amazing, goofy part is that the act is so predictable. The unwillingness to tell the truth, the accusation. Literally, as she said, when Jennifer Flowers stepped forward when Bill Clinton first ran for president as someone he had had an affair with, and she's done it every subsequent scandal, and she did it in this one, responding to the report of the Inspector General. And this one, again, keep in mind, he's a Democratic appointee. It's part of a vast right-wing anti-Clinton conspiracy. This is like Groundhog Day. She's offered it up. You know, people on each side excuse their candidate's behavior, saying the country's going to be in steep decline if the other's elected. That's the narrative. Well, newsflash. U.S. already is. The Donald and Hillary are not the cause of the decline. They're a reflection of it. How low the standard of leadership has become. One final point. It's incredible. Most of Canada's media seems vexed by Trump. They're missing the bigger picture that is manifested in the rejection of political elites around the world. I talked about Iceland earlier. This is a necessary component of the long-term trend of declining confidence in governments, consistently outlined on this show, and all the accompanying volatility in currency, stocks, and other investments. Hillary Clinton is the last of the old guard establishment. No matter if she's elected or not, they're done. And both Trump and Saunders are not one-off. Here's the news flash. They're the beginning of a political upheaval that's coming. Mark it down. Bet it. The political turmoil is going to be extreme over the next 5 years. Go out and have a terrific weekend. I do appreciate you listening.